What's up, traders? Welcome to this week's episode of the Weekly Watch List, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market, our core list of companies, and this week I've got two trade ideas to share with you towards the end of the video, so definitely stay tuned for that. A couple of housekeeping things. Number one would be that I sincerely hope you enjoyed the Thanksgiving holiday or just a long weekend with friends and family. Number two is that we very intentionally have chosen to only include two trade ideas. If you go ahead and scan the market, what you'll find is that based on Friday's news, the variant, so on and so forth, a lot of these have printed, right? So hammer candles are everywhere across the market, but they're in random locations, right? This is very speculative, and I hope these two trade setups we will share with you are much more actionable. And then lastly, number three is that anything, as always, that we're associated with is linked down below in the description. So be it the Discord, be it the Swing Trade newsletter, be it the second YouTube channel, all of that stuff is down there for you to check out. And without further ado, let's jump right into these charts. So kicking things off on our SPY weekly chart, talking about candle structure and location as we always do, keeping it very objective and not getting into the emotions of selling and panic, so on and so forth. So the upper wick would certainly indicate that we did have some selling pressure right up here at the all-time highs. That, of course, is bearish. The huge red body is also a bearish indication, noting that we've closed at the lows on a fairly large expansion of range. The other thing is that we do have a little bit of a lower wick, but what this is telling us is that if there was any buy reaction here, it certainly was not that strong. Again, the large red body indicating we've closed near and at the lows. So from a structural standpoint, we certainly have a bearish candlestick. In terms of location, I would also argue the bears took this one. If we look at the prior week's low, that was taken out to the downside. And if we look at the prior week's high, it was taken out to the upside, but close well underneath, correct? So I would start to look at this as a bearish engulfment. The same thing holds true for the prior week before that. We definitely took out the low of that candle. And even if we go one more further back, although we did not close underneath this low, we certainly tested it and closed very close to it. So in my estimation, from a structural standpoint as well as a location standpoint, the bears take this one this week. However, here's the beauty of a weekly chart. If we scrunch it up, would you say that this chart's uptrend has been destroyed? The answer should be absolutely not. If anything, we're just starting to see a bit of a healthy pullback after a very impressive run all the way off the low end of the channel. And speaking of the channel, we should throw that back up on the chart. So here we go. Let's make that a little better. There we go. We'll redraw to get that perfect upper resistance trend line. That's exactly where we're pulling back from, but notice where we've landed on the close of the week, right at the midpoint of the channel. We've been comparing this past little while to all of the instances in here where we've banged our head up against the upper resistance trend line. What acted as support in nearly all of those instances? Not the most perfect hold, but definitely the midpoint of the channel. Here as well. Certainly it did break on this one, and it will break eventually, but for now we're kind of at that magic spot, the 50% mark of the channel. I'm not saying it has to hold, but in terms of looking at this as a sort of case study, an example of what happens when we're here, maybe it starts to hold up as support here from the weekly. Again, just reiterating, there we go, that the weekly uptrend has not been destroyed here from this week's pullback, okay? Let's drill down to the daily now and talk in terms of scenarios, levels, all of that good stuff. What we'll notice is that the support trend line is certainly no longer in play. Let me also make the case right up front that I do think the marketplace does have a little bit lower to go, and the main area to watch out for is simply here, the prior cluster of all-time highs. It's also a nice round number, 453, and the 50 SMA, the blue line, could pair up beautifully for a super support. Now, why do I think we're going there? Well, if we take a look at volume from Friday, and remember also that Friday was only a half-day session, very impressive sell side activity here. It definitely had some strength. So will that continue into this upcoming week? I'm thinking that it may, just a little bit, and this will be the all eyes on level at the 453 mark. Why else do we think it could go lower? Well, if you watched the Tuesday video, what you'll remember is that we were talking about the sectors, and the XLF has actually done something very dramatic. Remember that we were talking about this move here being a good sign that we were holding up at the top end of the range? Well, yeah, on Friday Friday, we sort of threw that out the window, closing back inside of this range right here. So the XLF is actually posing a threat to the uptrend in the S&P as of right now. Certainly not the weekly one, but from a bar by bar perspective, this would indicate that the XLF, the financial sector, is the one providing the drag as of right now. As long as we remain underneath this 39 whole dollar, I would imagine that the S&Ps do see a little bit of a move lower. If we take a look at the XLK and check in on this one, we still are within the realm of a higher low, right, from here to here. So no big concerns in tech. We'll, of course, talk about the Qs in just a moment. And then the XLV for the healthcare sector, zooming in a little bit here, what you'll notice is we're still above the sort of line in the sand at that 131.75. So although not a concern yet, it could potentially become one. And that's why I'm going to say that the XLF is really where your focus should be for the upcoming week in determining what happens with our S&P. So back on over to this chart, here's the sort of case that it bounces, right? And this is kind of interesting. If we take out our Fibonacci's from the low all the way up to the high, where did we essentially bottom out on Friday's session? Right at your 38.2. So to me, if it's going to be, just a healthy pullback, nothing really more than to bat an eye at, it would be healthy consolidation in here, forms a beautiful weekly bull flag, and a breakout eventually back up over those highs, takes us back to blue sky territories. That's if we hold the 38.2. That's if the financials rotate to the positive direction early on in this upcoming week, and we hold on to 458.40. Okay, that's the bull case based on the Fibonacci, the 38.2. As I mentioned, I really do feel like there's a bit lower to go here, but notice where your 50% is. It's also tying in with that prior set of highs. 50 SMA will be there. So to me, it just makes so much sense that the 453 is the all eyes on level here in your S&P. So hopefully that was useful in terms of talking about scenarios. In terms of upside, you're basically looking at a retest of the double top neckline. So here's your double top. There's the neckline, right? Basically right here at the 462, that's your gatekeeper. If we get back above, look for the gap to fill, look for that bullish consolidation case as we just discussed with the 38.2. If we resist at the 462, roll over to retest this low, that's an instance where I would expect lower into that 453. So those are the instances that I'll be paying attention to in the S&P. The last thing I'll tell you about this, and hopefully this is not information overload, this also builds the case for both directions, right? If we take a look at the volume read, absolutely horrific on Friday. What we typically look out for is the minus 300 million plus 300 million. We clearly took that out and some on Friday's session. And again, remembering that it was only a half day, how much more damage is left to be done? Not entirely sure, but this certainly is convincing for some more downside. The next thing that builds the case for the opposite direction, believe it or not, is the fact that your advanced decliners across the New York Stock Exchange were reading at, unheard of levels underneath that minus 2,000 mark. So what that means is that nearly everything on the New York Stock Exchange was down on Friday. And if there's even a little bit of an uptick for a dead cat bounce in some of those names, maybe that's enough rotation to keep your S&P afloat. So two key things that I would watch out for is what is your breadth reading early on in the week? Is it really negative, meaning, less than, and by less than, I mean greater than. So very interesting dynamic here. Basically, what I would want to see is reads that were, minus 5 to 1, minus 7 to 1, minus 9 to 1, if that makes sense. Hopefully that was clear on your breadth. And if it's going to be bearish, you don't want to see these all the way down here underneath 2,000 again. What would be more acceptable and allow for more rotation and continuation to the downside would be an advanced decliner that's kind of around here. So minus 1,500 above 2,000, kind of in this sweet spot that we call the trend zone. Last thing we would point out from the internals is that the ticks actually migrated higher all day, meaning that a lot of things were reacting, positively, bullishly to the gap down. People bought that gap down, which is why your tick was trending higher, which is also why we mentioned in the intro that there were a ton of hammer candles that printed on Friday's session. So when you add it all up, going back over to your S&P chart, the main thing to watch out for is this right here and this right here. If we're back above bullish, I would expect that consolidation to unfold above the 38.2 as we mentioned. If we're underneath this, your target is all eyes on 453, 50 SMA and the 50% retracement of the move from here to here. A lot of information today, but given the, sort of unsettled nature of the market right now, these are all of the things that I'll be keeping an eye on. Next up, we'll move over to our QQQ. We'll speed up a little bit through the rest of the broad market. The first thing I would point out here is that there's relative strength in comparison to your SPY. And the obvious reason is that you do not have the drag of the financials in a tech-driven ETF. So for now, the fact that it's still inside of this range does not strike me as overly bearish. Now, obviously, this starts to turn into a flush point here at the 390. And if broken, just like the S&P, you're looking for a retracement to here, the prior highs, the 50 SMA. Let's also see where it is in comparison to our 38.2 or just Fibonacci structure in general. Would you look at that thing of beauty right to the 50% mark? Here's your 38.2 again. So in the QQQ, not as much nuance to pay attention to. I would just keep it very simple. Are we above this level at 390 or below? If we're below, all eyes are on 382.34, 50 SMA, and the 50% retracement. As we mentioned, there's no gap to fill overhead, so I do think that this is choppy through here. The main concern about, in terms of pattern at least, would be the fact that this could turn into a head and shoulders pattern, and this would be your neckline, of course, for the flush lower. That sort of covers that downside case. But if we break out, it's all about, can we set an equal high to that all-time high around 408.62? I still feel like the QQQ, not the XOK, is poised in a spot where it's not really posing a huge threat to the marketplace just yet. Let's continue on with our IWM here and talk about the small caps and the major disappointment. This one obviously suffering, the worst on Friday. So here's the range. Everyone knows about the range, but this is the look above and fail. And the fact that we now have a gap above us, we gapped down, closed fairly weak in the midpoint of the range. We tested the support trend line. I would not be surprised if this continues to rotate a little bit lower, just like your S&Ps, remembering that with potential threats of shutdown and the variant that, the big news from Friday, essentially, that's going to impact small business much more than your things like tech and the stay-at-home trade, which is absolutely fine through something like what we've seen over the past couple of months, past year or so, dealing with the sickness, if you will. So IWM, in my estimation, has the most to lose, noting that technically speaking, on a look above and fail, the target should always be the bottom end of the range, which, as we know, is 208. Now, does it get there over the course of the week? I'm not saying that, but I would look for potentially a breakdown of this support trend line. With the half day on Friday, I'm not entirely ready to say that this truly is a hammer candle, right? You don't want to read into that structure too much with the wonky half day there. Obviously, volume, as we mentioned, incredible there on the Friday session, bigger than almost anything we've seen so far this year. So IWM, caution, still kind of signaling neutral risk, not aggressive risk on. We're not, taking this out and remaining above. We're kind of in the midpoint now of the overall range, which, as we've said over the past, however long it's been, in the midpoint of a range, it's always a 50-50 shot on whether or not it's higher or lower. Obviously, this will be sensitive to news impacts, but the look above and fail is pretty concerning in your small caps. So all things considered, the market's teetering on the edge. There's a lot of things to keep an eye on this upcoming week, but hopefully this was useful in pinpointing where your focus should be. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video comes out. Kicking off our companies here with Apple, what you'll notice is just like the rest of the market, down day on Friday. However, we caught ourselves right at the prior all-time high. The question in Apple is, as we talked about in last week's video, where do we catch ourselves? Is it going to be the 157? Is it going to be the 155 or the 153? Any one of those will do for a higher low support, and we're only concerned about a more bearish trade developing if we get price acceptance underneath 153.13. Now, over the course of about 5 days, that could potentially coincide with a move into the support trend line. And in my estimation, based on the fact that we made a new higher high, this is a potential buy spot in Apple. So if we were to come down in here into the super support area, start printing hammers, indecision dojis, things that basically make you question the strength of this pullback, that's where I would want to get involved, flipping long over the highs and retargeting some of these upper levels. Now, if we come down and just immediately slice through with big red-bodied candles, that's where you step aside. I would really expect more chop in here in this prior range that we took some time to actually resolve. So Apple, as of right now, it's on watch for pullback buys in my estimation. If you want to trade it short, you're just looking at these very short incremental targets to the downside, not getting overly aggressive until there's a breakdown of the support trend line. Netflix, you can see it's the only green name on the list. However, zooming in, it's just due to the fact that it gapped up, correct? If we look at this in terms of an overall range, here's your range. And our levels are actually almost perfectly splitting it into thirds, calling this number 1, 2, and 3. In number 2, it's kind of a crapshoot which direction you go. In number 1, you're more bullish. Number 3, more bearish, correct? As of right now, holding up in number 2, 50-50 shot. Look for the breakout up and over the highs at 676.32. That could coincide with more bad news, as weird as that sounds, about the variant, right? Because Netflix is the stay-at-home trade. So bad news could mean good here for Netflix. If we remain in the middle, look for chop and a breakdown underneath this 661.50. That's where you look for the 50 SMA and the bottom end of the range here at 640.28. Direction isn't abundantly clear. We're literally smack in the midpoint of this overall range right now. Next up, we have Tesla, and Tesla has pulled back along with the rest of the broad market, but again, being more of a tech company, not feeling the impacts of those headlines so much. As of right now, we're moving back down underneath the breakout point from here at the 1105 that we discussed in length for a while. The main thing to focus on is, can we get a candle close underneath our 1076.62? If we can close a bearish candle underneath, that's where a larger rotation to the bottom end back towards 1000 comes into play. If that does not happen, I would just look for a higher low to form and a move back up and over that 1105 to get into 1160, give or take. Now, if we take a look at the 30-minute, because the daily is very sort of drawn out, I suppose, based on the ranges here, you can see this very, very clearly, right? Bearish candle closes, more price acceptance underneath that 1076. That's where we get bearish to the bottom end of the range at 1000. You can see that there's really not a whole lot. Maybe there's an intermediate support here around 1050, but I would really go based on the 1000 top end of the range, or bottom end of the range, excuse me, noting that we would have a look above and fail back down towards the bottom. Again, holding up in here is fine. It's a higher low. Looking at something like this to retrace here, and then you can walk up those targets from the daily. You don't want to get overly nuanced here. The last thing I would point out on the 30-minute while we're here is why this is a breakdown point is because if you look at this is kind of the theme, right? There's your head and shoulders pattern, a breakdown candle acceptance underneath. That unlocks the bearish trade here inside of Tesla. Let's go back up to our daily, continue on the watch list with Alibaba. This one, not a whole lot to say about it, obviously not being as impacted by the news. I feel like the damage has been done from this run here. It's all about holding 130 at this point in time, and you need to be on the lookout for some sort of bottoming pattern. You don't want to just fish down here for longs. Sure, it might work out, but in my estimation, the way that this is going to unfold would be, can we form a double bottom? Break of the neckline takes you higher to get back up into some of these upside targets, or does it form as an inverted head and shoulders, right? Could be something like this, shoulder 1, head, shoulder 2, could be a number of things, but looking for pattern really inside of Alibaba, noting where we're trading. Day trades are fine as well based on, any intraday setups. Facebook is up next. This one is absolutely sloppy still. If we take a closer look at what's going on, obviously we're still in the downtrend. Things don't really change in Facebook until we can break up and over that. I still will maintain that this, in my estimation, is the bullish trade to be watching out for. Obviously, into the end of the week, we're not as close to that breakout point around the 355. We'll call it for round number's sake. I would look for chop in here. I'm not overly convinced based on direction. It's been a very, very tough one to read from the daily perspective. So probably intraday trades only here, as if we're underneath this 338 down to about our 323. Getting more bearish underneath this, though, noting that that's kind of invalidating the potential inverted head and shoulders, right? If we break down underneath the shoulder line, not the neckline, but the shoulder line, that would likely lead to a rotation to the head at and around 310. So Facebook, take it day by day, still going to maintain that very choppy direction here. The bullish trade is still from here to here, which is obviously not on our radar for this upcoming week yet. Okay, NVIDIA is up next, and this one is also chopping around sideways, not being overly impacted by the news, but certainly a red day, right? You can't ignore that it's a red day. So for now, chopping, right? Balance has been formed in this area. If we can take out the highs, the 2-day highs at this 326.50, look for a rotation to the highs. If we take out the bottom end, this is where I would not be overly aggressive to the short side. Remember that we have a gap to fill in here. So from 308.99, call it 309, down to 305.40. That gap will fill, and then we could potentially see the top end of this prior range start to offer some support. So I would not be bearish here. Instead, I would start to be on the lookout for hammer candles that print, indecision doji candles that print, basically things that make you question, right? Is this going to hold this support? Then when we flip long over the highs as normal, get back up into some of those upside targets. The only bearish trade in NVIDIA as of right now is a breakdown underneath these lows at, let's call it 287.50, okay? So that's where the bear case is unlocked, and as of right now, I'm just not seeing it. If you think about this as a bubble of value, and this is a new bubble of value, that is certainly above the prior bubble. So we're technically forming higher lows, higher value, not seeing the short trade inside of NVIDIA. Nextly, we have Microsoft. This one pulling back a little bit more aggressively than some of our other tech companies. The concern in this is the fact that we're breaking down underneath this area of support. Technically, we have the daily close underneath, and these levels that we've pointed out from in the past, you can go back and watch the videos. These are not like important areas of support. These are areas where we might get a little bit of a hang up and then move to the next one, a little bit of a hang up and then move to the next one. This is not an overly important area from a structural standpoint. It's a bump in the road. So this kind of opens up the door for lower in Microsoft, knowing that these supports aren't overly, strong, or we're not going to be overly confident in them. So if we see downside continuation, which we may because of the bearish close here, you're looking at 326, we'll call it for round number's sake, bump in the road, not a hugely important area of support, and then underneath that, 322.31, underneath that, all about the 50 SMA and the gap underneath us. Now, I'm not calling for an all-out collapse in Microsoft, but what I am saying is that from a structural standpoint, these are not the best and most confident levels. Hopefully I've made that abundantly clear. We're not looking for major reversals out of them. If it does happen to reverse in a big way out of them, then fine, but it's really not the setup to be taking, flirting with very, very, weak structural support. So those are my 2 cents in Microsoft. If there is an upturn, it's all about this resistance right here at the 338. You can see there was a bit of a run early on the Friday session morning, and that's exactly where we resisted and rolled back over. Next and lastly, we have Amazon here for the beast, and zooming in on this one, our chart's very, very simple. In prior videos, we were talking about the potential for a bull flag consolidation up here, breakout takes you higher, or a break and retest brings you to here. So the break, retest, there we go, brings us to here. Obviously, that all changed on Friday's session, closing firmly inside of this range now. And what I would look out for is, okay, does our next support hold? Obviously, a very bearish close here in Amazon down at the lows of the session. Volume picking up slightly, not as much as what we saw earlier on in the week, but slightly. It's all about your 34.60. If we hold that, then fine. That's sort of like a saving grace. But if this all starts to go, probably starts to get nasty real quick here inside of Amazon, noting that we would come into the 50, the support trend line, the 200, and again, just very, very aggressive and ugly move available in Amazon on the break of some of these things. Our next major area of support that we would watch out for is down here, correct? At the 3,300. So Amazon, be careful with this one. I wouldn't go bottom fishing just for the sake of bottom fishing, thinking that it's going to be in an uptrend. If you also look at where it is relative to its prior all-time highs, this is actually relatively weak compared to Microsoft, compared to NVIDIA, compared to your Tesla. Okay, so just keep all of that in mind as and if you decide to trade Amazon. On an upswing, it's all about the 35.85, getting back over that breakout point to return into your 37.10. As of right now, doesn't really look like a likely scenario. Quick reminder to hit the thumbs up button, subscribe to the channel, hit the bell button, all of that stuff YouTube tells us to tell you. And let's get right into these trade ideas. So AMD is number 1 here. And the reason this made the cut is because look at the action from Friday. In my estimation, this is very telling, right? Obviously on Wednesday's session, we saw an expansion of range bar to the upside. We came right into resistance and stopped. On Friday's session, we see a pause, a resting bar, an inside bar. You can call it whatever you want, but it's not overly bearish. If you take a look at what was going on with volume as well, volume was not increased like we saw in that broad market where it took a little bit of a harsher beating. In my estimation, based on my eyeballs being calibrated, I would also say that we held above the 50% mark of the Wednesday range. That, of course, is also bullish. So a resting bar here at the highs, literally all-time highs. If we can finally close a candle up and above 158, I think we see a breakout for another leg higher here inside of AMD. It also checks out with the social sentiment of sort of chip sector being hot right now, crypto, gaming, mining, metaverse, all of that stuff. It checks out in my estimation for a bullish setup inside of AMD. I'm not so interested in the trade if we obviously violate Friday's low, but more importantly, start taking out this secondary support trend line here. It's off my radar for a little bit, but then coming right back on if we come into the primary support trend line coming in from the low here, touch number 1, Two, because we've made new highs essentially, I would look for buying opportunities at the primary support trend line if we get there in the first place. But ultimately, the idea in AMD would be a breakout up and over 158. For blue sky territories, technically your all-time high is here, 161.88, but we never closed at and around those levels. That's AMD in a nutshell. Hopefully you can see why this made the cut instead of just a random hammer candle somewhere on a chart. Next up, Applied Materials. And zooming in on this one, I fully understand these are two bullish trade ideas in the face of a potentially bearish market, and that's fine. You just don't have to take them if you don't believe in them. But here, very, very obvious zone of resistance, struggle to break it on a number of occasions. Basically, as we know, if we're truly making forward and upward progress in a stock, you can look at these as building blocks. Here's block number one. Block number two should form above block number one. So because we have a break and a retest of this area, I'm on high alert for any signs of reversal here. If we start printing things that look like hammer candles, if we start going sideways and printing things that look like indecision dojis, great. Technically, we could set up a breakout point up and over some of these candle highs. It would be beautiful if it was right around 145, and then look for the retracement into 150 and monitor for continuation back into the highs after that. AMAT is basically a break and retest of this level right here, trying to see if it will hold for support. Definitely in terms of looking into candle structure a little bit, not the most bullish candle, I'll give you that, but volume not nearly as aggressive as what we saw on earnings. I'd say it's on par with basically average for the stock and, not something to get overly concerned with. So those are the two trade setups, all based on structure, not random hammer candles. Again, hopefully you can see why they made the cut. If you're more bearish on the market, that's fine. Just simply observe these setups. You don't necessarily have to take them, but this is what I'll be watching on top of our typical watch list. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked down below in the description, where we do an analysis of about 10 to 12 stocks per day. And with all of that being said, I wish you a green trading week.